The counter you see in the bottom left corner right now isn't a special effect. It is reality itself. This is the debt burden weighing down the American people. This counter will not stop while I speak, just as the crisis never stops. Look at your calendars. Today is February 16th, 2026. History books will likely write about this period in the future as the winter when the Great Unraveling began. You probably remember the 2008 crisis or the economic effects of the 2020 pandemic. I can guarantee you this: those crises can only be a trailer for the process we are experiencing right now. While watching this video right now, you probably think you are in a normal day. You woke up, drank your coffee, got stuck in traffic, went to work. Maybe you checked those fake green numbers on the stock market from your phone, the new records of indexes, and smiled. You thought everything is fine. But let me tell you a secret. The ground you are standing on right now is not solid concrete. On the contrary, it is a thin layer of ice about to crack, and the ocean beneath that ice is boiling. While you are looking at election polls on TV, which professions AI will end, or celebrity magazine scandals, the biggest, most comprehensive robbery in modern history is being completed silently. Masked men did not rob a bank branch, but your future, the labor you gave for your children, and your dreams were stolen. Behind closed doors in Beijing, that button was pressed. The People's Republic of China sold the U.S. Treasury bonds it held. They didn't do this overnight. To not spook the market, they did it slowly, spreading it over years. And at the beginning of 2026, that critical mathematical threshold was crossed. A massive asset block of $628 billion evaporated from the financial system. This is not a simple asset sale or portfolio diversification, friends. This is an irreversible, silent, and bloody declaration of war against the global financial system built on the American dollar. Maybe right now you are saying, I don't live in America. I am in Istanbul, Berlin, Sao Paulo. What do I care about the bonds China sold? You are very wrong, because this war is not happening in the Parliament buildings in Washington. It is happening in your kitchen, in your refrigerator, in your child's school installment. Those tie-wearing, serious-looking experts on TV tell you, inflation is 3%, everything is under control, we are making a soft landing, don't they? They are lying while looking into your eyes. Statistical institutions hide the truth from you by changing the products in the inflation basket, not accounting for quality degradation, and with statistical tricks they call hedonic adjustment. Now turn off the TV. Put aside what those experts say. Just look at your wallet. We are going to conduct a global experiment with you right now, right here, under this video. This will be our own data set. Pause the video and go down to the comments. I don't want the official figures of the Fed or the European Central Bank. I want your reality. Write this to me. From which country and city are you watching? America, Germany, Azerbaijan, Brazil? What was the price of a standard liter of milk or a loaf of bread that you bought this day last year? How much are you paying for this product today, on February 16th, 2026? Please look at the comments, read through them. What you will see there cannot be explained by the word inflation. What you will see there is the map of the global collapse of a currency. The price of a liter of milk is not increasing, friends. The value of milk is the same. The only thing changing is the falling value of the money in your pocket. If you live in Germany, Turkey, or Indonesia, this crisis concerns you more than an American in Ohio. Do you know why? Because that collateral standing in your central bank's vault, protecting the value of your local currency, is melting. The global system is like an interconnected chain. If the U.S. sneezes, the world is taken to intensive care, and the American dollar has started coughing up blood right now. Today, we will talk about how those monies you think are safe, for which you spent your life, turned into toilet paper. And most importantly, I will tell you what you need to do to not stay under this rubble, and even to come out of this wealth transfer stronger. If you are ready, we are starting. The language of mathematics is universal. It has no emotions, no political views, and most importantly, it does not lie. Politicians lie, central banks lie, the media lies. But math doesn't lie. And right now, math is screaming to us that the US-led global financial system is technically bankrupt. Let's look at the numbers as of February 2026. The U.S. national debt is pushing and exceeding the $37 trillion limit. It is easy to pronounce this number, 37 trillion, but the human brain cannot evolutionarily grasp this magnitude. Let me explain the size of this debt to you like this. If on the day Jesus was born, that is, on the first day of the Gregorian calendar, you started spending $1 million every day, in the year 2026, you would still not have finished $1 trillion. You would have spent only about $740 billion. The United States has 37 times this amount of debt. And the terrifying part is, this debt is no longer increasing linearly. Every 100 days, $1 trillion more is added to the debt. In mathematics, this is called exponential growth, and exponential growth has only one result: collapse. So, who pays this debt? Don't say the state pays. The state has no money. The state only has the tax it takes from your pocket. You are paying this debt. Your children are paying it. Even your unborn grandchildren are paying it. The system works like this. The American government wants to spend money on wars, social aid, bureaucracy, but there is no money in the safe. The Treasury Department takes out a piece of paper, writes bond on it. This is a promissory note. It says, "Lend me money, I will pay you back with interest." 20 to 30 years ago, China, Japan, Saudi Arabia used to buy these bonds with oil money. They said, "The dollar is safe, it is the world's reserve currency." But in 2026, things changed. China is selling, Japan has to sell bonds to save its own currency. Saudi Arabia now wants only dollars for its oil? No. Russia has been completely removed from the system. So what happens if there are many sellers but no buyers? In a normal market, the price collapses, interest rates skyrocket to 20%, 30%, and the country goes bankrupt. But this is not a normal market. The central bank, Fed, steps onto the stage as the buyer of last resort. What does the Fed do? It creates billions of dollars out of nothing by pressing a button, and it goes and buys those debt papers issued by its own state. They call this quantitative easing on TV. Sounds very technical and scientific, right? If you print money from your printer at home and go to the market, they throw you in jail. But when the state does this, it is called economic policy. Every time a dollar without backing is printed, the value of existing dollars in the system falls. But the tragedy is this: not only the value of the dollar falls, the global financial system is like an interconnected chain. The Central Bank of Brazil, the Central Bank of the Republic of Turkey, the European Central Bank. They all hold dollars as a safe asset in their reserves. They show dollars as collateral. When the value of the dollar melts, that is, when the value of the collateral rots, the Brazilian real, Turkish lira, euro, or South African rand, they are all pulled into that vortex. America is exporting its own inflation to the world. While you are going to work in the morning in Germany, Turkey, or Korea, enduring that traffic, you are actually paying for the debts America cannot pay through the labels in the market, changing every day. Your labor is being stolen. What you call the high cost of living is actually the reflections of the noise made by a collapsing economic structure. The point we have reached in 2026 is this: the annual amount the U.S. government pays just for the interest on its debt has exceeded the defense budget. This is not a sustainable situation. At some point, they will either default and say, "I am not paying the debt," which completely locks up the global system. Or they will print money so much and so fast that, just like in Germany in 1923, it will be much cheaper to wallpaper your walls with the paper money in your hand. History shows that there is no third option. The cause of the financial collapse is math, but geopolitics always pulls the trigger. And throughout history, this situation has always progressed in the same way. China selling the $628 billion of bonds it holds is not a simple portfolio change or an economic decision. This is a strategic attack, a financial nuclear bomb. Remember, what did the Western world do when the Ukraine war started in 2022? It seized Russia's $300 billion of reserves abroad. It kicked it out of the SWIFT system. The Western media applauded this as sanctions. But in financial history, this was a turning point, a breaking moment. That day, Beijing, Riyadh, New Delhi, and Ankara received this message. If your money is in dollars, if your money is in New York or London banks, that money is actually not yours. You are using that money with Washington's permission. One morning when you wake up, your money can be seized. Trust is the only pillar of a currency, and that day, that trust was broken. That is how the de-dollarization process accelerated. The media doesn't tell you this, but as of 2026, BRICS is no longer the old BRICS. Egypt, Ethiopia, Iran, United Arab Emirates. This coalition now represents half of the world's population. But more important than population, these countries control most of the world's energy resources, oil, natural gas, and trade routes. Let's look at Saudi Arabia. Since 1974, for exactly 50 years, they sold oil only and only in American dollars. This was called the petrodollar system. America would protect them, and they would create demand for the dollar by selling oil in dollars. This agreement is officially over. Saudi Arabia is now selling oil to China in yuan, to India in rupees. They are even trading via digital currencies. Can you clearly understand what this means? In a world where oil is not priced in dollars, there is no need for countries to hold trillions of dollars in their vaults. When the dollar's reserve currency status ends, where will those trillions of dollars circulating in the world, those unwanted dollars, go? They will all return home, to America. That's when hyperinflation will stop being just an economic theory and become the most bitter reality of your daily life. And China doesn't just have the bond weapon, they have a more physical, more painful card. Look at the smartphone in your pocket, the screen you are watching this video on right now, the battery of your electric car, even the guidance systems of NATO missiles. Rare earth elements like gallium, germanium, lithium, cobalt are required for these to work. China controls 85% to 90% of the processing market, not just the extraction of these elements. The Western world gave up on production in the last 30 years, closed its factories, and got rich only with financial papers and stock market speculations. They said, "We design, China produces." But this arrogance became their end. The East seized the factories, mines, ports, and supply chains, that is, the real wealth. Now I ask you, when war breaks out or in a moment of crisis, which one will save you? The digital numbers in your bank account that will vanish when the electricity is cut off, or those mines that make the chip of your missiles, the battery of your car, the MRI machine of your hospitals. China has now put the supply chain weapon on the table. It says, "Pay me your debt or I won't give you raw materials." This is a total heart attack scenario for Western industry, especially for Germany and Europe, whose industry depends on raw materials. I told you about the war being waged with China outside. Now let's come to the war happening in the heart of America. Here I will tell you about a civil war that you will never hear in the media, hidden by the headlines. This is not an armed war, it is a dollar war. On one side, the Trump administration and the new state mind behind it, wanting to revive American industry, rusting factories, and desiring a weak dollar to compete with China. On the other side, the Wall Street elite who have been exploiting the world through a strong dollar policy for years, detached from production, earning money only from money. The Trump administration and the Treasury are no longer just asking the Fed for an interest rate cut. They want the Fed not to act like a central bank, but to act like a government department working for national industrial interests hand in hand with the Treasury, just like in the 1950s. The keystone of this strategy is Kevin Warsh. His possible Fed presidency or key role in the administration is the official end of that famous independent story of the Fed. The arrival of Warsh means the beginning of the financial repression era. So what should we understand from this? In this fight with China, America no longer has the luxury of getting stuck on the 2% inflation target. If China is disrupting the market by selling bonds, if Japan is in trouble and wants to sell American bonds, the Fed no longer has the chance to say, "I only look at inflation, I don't care about the market." The Trump administration wants the Fed to go down to the field and swallow those bonds, if necessary, buy Japanese yen to weaken the dollar and open the way for the American exporter. This situation is the end of the 40-year strong dollar myth. To regain its own industrial base and bring back factories, America will take from the pockets of those who have money, that is, Wall Street and savers, and transfer this resource to the industrialist and the indebted state. They will deliberately keep inflation high to melt debts. This is not a choice. This is the survival reflex of a collapsing economic structure. Now let's come to where we will hide in this storm. Most of you immediately think of gold. Central banks are buying gold at record levels right now. The Central Bank of China is increasing its gold reserves every month. They know very well what is coming. But today I will talk to you not about the kings, but the people's opportunity, namely silver. Because what is happening in silver in 2026 is an unprecedented event in 5,000 years of financial history. Stop seeing silver as just an investment tool, a jewelry, or an ornament. Silver is a strategic industrial metal. Without silver, modern life stops. You can imagine a world without oil, but you cannot imagine an electronic world without silver. Silver is the element that conducts electricity best. There is a revolutionary change, especially in the energy sector. Technology in solar energy panels has changed. Old type, inefficient PERC panels are no longer produced. New generation cells we call TOPCon and HJT have become the industry standard. I am explaining this technical detail because this new technology uses 50% to 100% more silver per panel compared to the old one. Not just in solar energy, in every electric vehicle, many times more silver is used compared to internal combustion engines. 5G base stations, AI servers, smart missiles are all in need of silver. They use silver, and this silver cannot be recycled. It disappears. And here is the biggest problem. Silver is running out. The amount of silver coming out of mines has been falling for years. Easy to find reserves in Mexico, Peru are exhausted. Mine grades are falling. That is, the silver obtained from a ton of soil is decreasing. Contrary to this, with the green energy revolution and the AI explosion, the demand for silver is going up in a vertical line. Let me ask you a simple economics question. What happens if demand explodes while supply falls? The price should go to the moon, even to Mars, right? So why is the silver price still moving in the $30, $40 band? Why is it still accessible? Here, the biggest financial illusion and manipulation in history comes into play. A game called paper silver is being played on London and New York commodity exchanges. When you buy silver from the bank, your banking app, or an exchange-traded fund, you are actually not buying silver. Please understand this. You are only buying a promissory note indexed to the price of silver. It says silver 1,000 guar on the screen, but that silver is not in the bank's vault. In the system, for every 1 ounce of physical silver standing in the vault, approximately 300 to 400 ounces of imaginary, virtual, paper silver have been sold. In banking language, this is called rehypothecation. They sell the same silver to me, to you, to Mr. Michael, to Hans. They suppress the price by selling these non-existent paper silvers. But in 2026, the game changed. China, India, Russia, and awake investors all around the world are no longer swallowing this game. They go to the exchanges and say, I don't want the paper contract, I don't want the price difference, I want my metal, do physical delivery. And the exchanges are in panic, vaults are emptying, London's, New York's stocks are melting fast. This is a global game of musical chairs. As long as the music plays, everyone dances, everyone thinks they are rich with the paper silver in their hands. But when the music stops, which China is turning off right now, only one person will be able to possess the real physical silver. So what will the other 399 people do? They will be left out in the cold with worthless, unbacked paper certificates in their hands. Force majeure will be declared and their money will be refunded. But with what money? With the depreciating paper money. He who does not hold silver physically does not own it. Never forget this rule. If you don't hold it, you don't own it. Maybe right now you are thinking to yourself, okay, the situation is bad, but the state won't allow this. America is very strong. Europe is very strong. They will find a solution. This is called normalcy bias. Your brain refuses to accept the disaster. Let me give you examples from very recent history. Look at Argentina. Look at Lebanon. Look at Venezuela. Lebanon was once known as the Switzerland of the Middle East. Its banking system was very strong. There were doctors, engineers, teachers like you. They had $200,000, $300,000 of accumulated retirement money in the bank. They felt safe, rich, and peaceful. One morning, they woke up. Just one morning. Banks were said to be closed temporarily. ATMs did not give money. The state went on TV and said, "Your money is safe. Don't panic. We are just preventing foreign currency outflow." Months later, when they were allowed to withdraw their money, do you know what happened? They were told, "You cannot withdraw your money as dollars. You will withdraw it in local currency." But the exchange rate was fixed. The purchasing power of the $200,000 they worked and saved for years had dropped to only $5,000, even $2,000 in the real market. A lifetime of labor, sweat, sacrifice evaporated overnight. People sold their cars and houses for dirt cheap to be able to buy cancer medicine for their fathers, to buy baby food for their children. But inside that chaos, that fire, a group of people were calm. They were not panicking. They were the ones holding assets outside the system. They were the ones who did not trust the numbers in the bank and had physical gold or silver under their pillows in their safes. While the Lebanese currency collapsed, 1 ounce of silver was still 1 ounce of silver. It was valid all over the world. Its value in local currency had even gone up to millions. Those people were able to protect their families, while their neighbors were on the starvation line. They even got rich by buying real estate from those who had to sell their properties for dirt cheap. Crises do not destroy wealth, friends. Crises transfer wealth. The process we are experiencing right now is like a global Lebanon crisis. However, the difference is this. In the Lebanon crisis or the Argentina crisis, people could run to the dollar. Now, the center of the crisis is the dollar itself. There is no other paper money to run to. Euro and yen are also sinking in the same ship. Therefore, this crisis will be the biggest wealth transfer history has ever seen. And you will decide today which side of this transfer you will be on. So what should you do? Should you withdraw into your corner in fear? No, fear paralyzes you. Knowledge liberates. Don't panic, prepare. First, diversify your assets, but do this by staying outside the classic banking system. Turn to assets that do not carry counterparty risk, like physical silver, physical gold. These are no one's debt. Even if the electricity is cut, the internet goes down, the stock market crashes, the gold you hold in your hand is gold. No one can delete it by pressing a button. Second, review your investments in technology giants in the stock market. Do not ignore the evolving AI revolution. It is no longer just the era of NVIDIA selling chips. The era of other companies that use these chips, change their business models, and increase their efficiency is beginning. The valuations of giant tech companies are bloated. They have already priced in the profits of the next 10 years. In contrast, small and medium-sized industrial companies, which have been crushed under high interest rates for years and barely survived due to borrowing costs, are returning to the markets with the Fed's mandatory interest rate cuts and Trump's weak dollar support. This rotation is the biggest trap the market has set for novice investors. While you are still looking at the NVIDIA records in the headlines, the news of yesterday, smart money is silently exiting those giants. It is shifting to small, agile, real sector companies that are reducing their debt and can integrate AI into their business. The place where valuations are more reasonable and growth potential is higher is now these companies. To not say, the index is rising, but why are my tech stocks not rising? In 2026, you have to read this rotation correctly. Get out of that crowded room everyone is running to, whose door is about to be locked. Focus on those fertile companies that the crowds haven't discovered yet. Thirdly, pay close attention to the solution the system has prepared for you. When the crisis deepens, when banks fail, the state will come to you like a savior, and it will say, "The old money system collapsed, we are removing cash, we are giving you central bank digital currency. Do not accept this. Resist, because central bank digital currency is not money. Central bank digital currency is a surveillance and control coupon. They can put an expiration date on your money. They can say if you don't spend this money within 30 days, it will be deleted. They can say your carbon footprint is full, you cannot buy more gasoline, you cannot buy meat this month. If they don't like your political views, as in the trucker protests in Canada, They can freeze your wallet with a single button. Buying physical silver and gold is not just an investment. It is not a dream of becoming rich. It is also a freedom insurance against this digital surveillance system, against this totalitarian future. Time is running out. The sand in the hourglass is running out. China made its move. The debt clock is ticking like a time bomb. The music is about to stop. The question is, when the music stops, will you be the one sitting on the chair or the one left standing with worthless papers in hand? As we wrap up this video, look at the bottom right corner again. While I was telling you this 25-minute story, nearly $100 million were added to that counter. In just the time it took you to drink a cup of coffee and watch this, the system became nearly $100 million poorer. $100 million more of unbacked currency was printed. And who is going to pay this debt? You already know the answer. Be prepared. Turn on notifications, subscribe, and share this video with your loved ones. It is your responsibility to wake them up. Because the system will not tell you the truth. We will.